Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. I'm falling a little bit behind here and I aim for this video to be between 30 minutes and an hour long. So let's get stuck straight into it. Looking at the last comment or the question I need to reply to, and that was written by Chef Circle 6133 in my answer reply video released on the May the 25th. Any thoughts on CTD, which is Corporate Travel Management? And funny enough, yes, I have a lot of thoughts about this company. In fact, some conflicting thoughts about corporate travel management. Technically, the chart looks absolutely horrendous. Fundamentally, this company is approaching a point where I think it's looking really cheap. Maybe not really cheap, at least good value based off the history of this company. And not only the history of this company, also the 5-year goals the management of this company has for corporate travel management. They did release a 5-year strategy in the half years, their results that were released in February. And if I remember correctly, in fact, instead of remembering correctly, let's actually have a look. Corporate travel management. I'm not sure which announcement it was. We have to go back 3 months. Or is it? We have to go back more than 3 months now. And was it in the presentation or profit guidance? I want to have a look at the profit guidance. Now, the market didn't like this announcement. Share price sold off. So either the results were a little bit weaker than expected or the outlook was weaker than the market expected. But the main thing that attracted me to these results was just their 5-year strategy. And I love, here it is, 5-year growth strategy. I love when companies or companies management release any sort of these type of ambitions, or long-term ambitions. And definitely 5 years for an Australian company is long-term. I think a lot of management of Australian companies don't even have 1-year ambitions. They just want to keep their job or something like that. But I love it when companies have 5-year ambitions or some sort of strategy for the company. And this is what really attracts me to corporate travel management. Also, their past attracts me, their potential for growth as well. So the company releases 5-year strategy to double profits organically. That's the most important word here, organically. And in fact, they mention in point number 5 here, acquisitions are additional to the 5-year growth plan. So I love it when companies are able to grow organically, and any sort of growth through acquisitions is just an added benefit. And that doubling in growth, profit growth over the next 5 years is CAGR 15%. That's the sort of profit growth you want to see, earnings per share growth. Revenue growth 10% per year over 5 years. I should say 10% plus per year. Client retention 97%. EBITDA growth greater than revenue growth, so that 50% of every new dollar of revenue falls to EBITDA. Now, the question you have, of course, is whether the company can meet these goals. You could even say these are lofty goals. I wouldn't say that. I think these are definitely goals they can hit. And if they hit these goals, this company is dirt cheap right now. And I will say that. I will back that up. Dirt cheap right now. I'll show you why in a second. Now, the other question you have is around the quality, nature, or status of this company. If I had to judge the quality of this company, and I do have this company in my high quality portfolio, I would say Corporate Travel Management is a high quality company, but it's at the lower end of the quality spectrum. In a way, I could say or argue that this is a quasi high quality company. But right now, there's no way, zero way, I am going to sell my shares in this company because it is attractively valued, in my opinion. So let's actually open up. Let's open up FinChat and let's go to Corporate Travel Management. I don't really need Twitter. All right. So just a few financial, hopefully everyone knows what this company does. It's sort of in their name. So just a few things. So nice growth. This company has been growing revenue, earnings per share, EBITDA over the last 3, 5, 10 years. Now, this company was negatively affected by COVID-19. So you will see a bit of a dip in the share price and the financial performance over about a 2-year period, maybe even a 3-year period. But we're coming out of that now. And I do like to sort of compare this company to pre-COVID. Now, this company, I don't think it did a massive capital raising during COVID, unlike Webjet, Flight Centre. You can actually see that by the shares outstanding here. Shares outstanding have grown a little bit, but I think some of that was because of acquisitions. They did make a few astute acquisitions a few years ago, and I think those acquisitions were good for the long-term growth capabilities of this company. Now, I think one of those acquisitions has not performed as well. I think it was the UK, if I remember correctly, has not performed as well as I expected. Now, let's have a look at a few other things here. P ratio of this company is 17.7. Historically, that is extremely low for this company. What do I mean by that? So 17.7, and if we have a look at the ratios or the P ratio of this company over the past like 10 years, I'm not going to look at the chart for this one because I'm pretty sure the chart looks pretty weird because the P ratio was negative, highly negative in 2020 and highly positive in 2022 because of COVID-19. So just have a look at the yearly P ratios of this company over the last 10 years. 34, 37, 33, 44, 38, 29. Then we get to COVID-19. 34 last year, now 17.7. And also, if you have a look at the other valuation metrics, price to operating cash flow free cash flow yield right now is 6.1%. Historically, it's usually between about 2 and 4%. And in fact, free cash flow yield is one of the best determinants whether a company's can outperform the market. I have actually read research on that. Price to book ratios right now 1.7. Pre-COVID, price to book ratio of this company was between about 4 and 6. And so you can look at all these different valuation metrics. And right now, this company is probably the most attractively valued it has been for its history. Well, definitely during the last 10 years, apart from the COVID-19 financial panic period. And the company's growing. Now, in saying all that, if we do look at the semi-annual data for FinChat, and the one thing I don't like about FinChat versus Guru Focus is because I'm only paying for 10 years of data, but when you look at the semi-annual, it only goes back 5 years. So you have to pay extra to look at 10 years of semi-annual data or biannual data. So let's have a look at the revenue. And we actually have to get rid of the P ratio. So you can see the COVID-19 dip. And I suppose the one little complaint someone might have about this company is in the past half year, revenue was a little bit lower than the previous half year. This could be just a 1 half year blip. We don't know. Anyway, so I am bullish. Yes, bullish. I do think there is definitely an argument to say that corporate travel management is attractively valued at these levels, but the market is a little bit more wary. So I think it's all dependent on whether you think the management can meet those 5-year goals. If they can double their profit, the forward-looking P ratio of this company is 8. And if they can double their profit, the share price should double now to maintain a P ratio of 17. And if they can achieve those goals, more than likely the P ratio will not be 17. It would be more like 25 to 30 because the market would realize this company is a growth company on the ASX and they're more willing to pay a premium. So you get the financial growth of the company. You also get multiple expansion. So instead of the company's valuation doubling, it could triple or even quadruple for now if they can meet those 5-year goals. So that reason alone is why I would not sell my holding in this company, even though the chart looks horrendous. And this is where the fighting comes in. So this chart is absolutely an important chart, an absolutely ugly daily chart since they released their results in February. On that particular day, share price fell 20%. And I thought the market was overreacting at that point in time. And since then, the share price has dropped another 20% at least. 320, yeah. Not quite 20%. We'll say 15 or 18% since then. It's gone down from $16 to $13.39. Share price is in a downtrend. Yeah, there's lots of negative sentiment in this company. Share price in a downtrend. And it's gone through a support level as well at $14. And the last time the share price was this low was actually way back as the share price was recovering out of COVID-19. Share price high recently was in 2022 at $26, so double from where it is now. So last time share price was this low was back in August of 2020, coming out of COVID-19. And if you look at the weekly chart, so pre-COVID-19, particularly to 2018, a beautiful looking chart. That's the reason why this company came onto my radar. And I was a shareholder of Corporate Travel Management for a while during that massive bull run from 2012 all the way through to 2018. And now I think this company is looking dirt cheap. Maybe not dirt cheap. Maybe that's not the right word, but it's looking attractively valued. The only reason I'm not adding to my position is just the chart. I have no idea how low the share price can go. The best way we're to see an end to the drop in the share price is some way sentiment can shift. Maybe the way sentiment will shift is if more value investors see value in this company, or the company releases a good bullish financial announcement, like a profit upgrade. That would shift sentiment in an instant, but there would still be resistance moving forward because of all the shareholders who bought at higher prices. Anyway, maybe this is a standalone video on corporate travel management because I've been talking it for a long time. Chef Circle. Anderson says, thanks for covering Bellevue Gold. You're welcome. Dwight says, the reason Ethereum is having a little run is ETF applications for Ethereum have been approved by SEC. That makes sense. And Ethereum, let's have a look at Ethereum. Where's Ethereum? It's in this one. I did notice, I just came, so I have a look at charts during the weekend. So I'm recording this video on Saturday. So before I started recording this video, I started to have a look at charts just to see if there's any charts I'm missing out on. And I went that haven't popped up on my screens. And I just noticed gold was down a lot. Copper was down a lot. And then I also noticed Ethereum was down a fair bit as well. So Ethereum had been looking good, just going sideways after the very big bullish day on the 20th of May when it rose 19%. And that's what Dwight is saying. Just a few questions. Do you trade options? No. I have started to, I suppose, research the possibility of trading options, but I don't right now. Why don't you also use MACD? Moving average convergence. What's a D stand for? Moving average convergence. MACD. It's not McDonald's. Oh, convergence divergence. Yeah. I used to. I do on occasion look at RSI. But I don't have it in what I usually do if I want to look at RSI is I just go like this. So RSI. So you do use it. A lot of people use these to find overbought and oversold. It's not perfect. It's nowhere near perfect. So for Ethereum, it was overbought for a long period of time during February when the price of Ethereum kept on going up. Never really got into oversold territory, and also depends on your time or what parameters you use as well. On occasion, I will look at RSI, but I can just look at a chart and the way a company has moved and go, I think this company is oversold or overbought. And it usually works out. So for corporate travel management, I'd say it's more towards being oversold right now. Yeah, it's oversold. So I don't really need RSI to know whether a company is oversold, overbought or oversold. I can sort of tell. It's pretty obvious. And I would say that corporate travel management is oversold right now. So I don't really use RSI all that often. And the other thing I like to do is let me get rid of it. One of the things I like to do is I like to make everything as simple as possible. When you make technical analysis more complex, I think you will run into problems. So simplicity is my avenue towards or for success. And the other part of the question is also, why don't you use SMA and EMA? I do. I use exponential moving averages everywhere. In fact, all you're seeing here is moving averages, exponential moving averages. These little color, whatever you want to call it. So for corporate travel management, we have, what do I call these? The long-term and short-term moving average channels. So I have a short-term moving average channel, which is exponential moving average 25 and 50. And the longer term is, I think, between 100 and 200. And also this blue line, this solid blue line you can hardly see, is a 150-day exponential moving average. So I do prefer moving averages because that is, in my opinion, a good way to judge the sentiment and the trend in the share price. It's pretty obvious. You can see when the sentiment in this corporate travel management shifted. For example, I'm going to show you, I used this company not long ago, Crisis Corporation. When did the sentiment shift? So Crisis Corporation had beautiful positive sentiment and a trend in the share price. It was so obvious. I mean, there's no debate. from about the start of 2023 all the way through to the start of 2024. So this company, for 1 year, had really bullish sentiment and a really bullish trend. Share price went from 340 to 860, so more than doubled over 1 year period. But then the sentiment started to shift. The trend has found a little bit of weakness at the start of 2024. Share price went sideways, and you can see the short-term moving average channel starting to go red. That was a sign that some of the sentiment started to shift. And now, at that point in time, I had sold out and took profits. But if you just wanted to wait for confirmation, you got the confirmation on the 24th of April. When they released their, what would that been? That would have been their pennies 4C. Share price fell 12.4% on the day. That was it. That was, in my opinion, confirmation that sentiment has shifted from positive to negative, and the trend has shifted from positive to negative. That was without doubt the confirmation. I got out a little bit earlier than that just because I saw a bit of selling coming in during January, and that was enough for me to get out. That was the end of the uptrend in Crisis Corporation. And all I did was just look at volume and these moving average channels. And the reason I use two is more of a short term versus longer term. So this was definitely short and longer term positive sentiment. This was a period where there was a bit of remaining long-term positive sentiment about this company. So those are more the long-term investors, but the short-term traders, short, medium-term traders were getting out. And right now, they're both gone negative. Now, even though it's still shaded green, the longer term, it's definitely negative because the short-term moving average channel is now below it. And that will turn negative soon. In fact, the longer-term moving average channel is now heading down. Anyway, so that's a good example of a change in trend and sentiment in the company. Crisis Corporation happened over about a 3-month period. It sometimes can take time for sentiment to shift. Yeah, so I don't use simple moving averages. Is that simple? Pretty sure it's simple. I definitely use EMAs, those. Thank you. Thank you, Trey. Thank you. Reply. Thank you, Trey. Excellent. Oh, that was on my video, importance of volume. I love volume. So again, keep it simple. Volume, moving averages, and because I've been doing this for a while, I do get a sense of oversold and overbought. Fishball. Oh, you mentioned a few times you hold two story stocks, Alexium and Pointera. I'll show you the charts for both of those companies. What are they? Oh, there you go. Perenti is a great value stock with dividends reinstated. I'll talk about Perenti in a second. So Alexium and Pointera. Pointera, I actually have a fairly small holding in this. I'll be honest with you, a fairly small holding. And I do think if they can just, I don't know, there's something about this company and the potential of this company that makes me think there is, in the market cap of this company is 27.8. I just don't know. I just have a lot of hope is the wrong thing to have when you're an investor. Hope is probably the worst thing to have. That's why people maintain a holding in a company when you have a chart like this, like I did. I had hope in this company and I kept a small holding. Well, that holding kept on decreasing. The other company is Alexium. This is sort of a chemical company. They do have a product that I just hope succeeds because I am a runner, although I'm injured right now. And it was some sort of technology where the warmer you are, the cooler or more efficient the clothes are at cooling down. I read that and went, oh, I hope this company succeeds for this one product in itself. They also do fire retardant chemicals, cooling. I think the biggest selling product this company has now is bedding. And I very rarely, well, this time of year I do use blankets, but in the summer I very rarely even use sheets because I do get warm. And it's actually best to sleep when you're a little bit cooler than being warm. And the only thing I want is some sort of fabric where it's nice, it gets cool when you touch it. And that's what they sell, Alexium. But the chart looks absolutely horrendous. And this is a company, just like Pointera, if I see some sort of positive announcement from the company, or if I see a shift in the sentiment and a trend in the share price, I am going to buy more shares. I do have a little bit of fear about this company that it won't make it. Just won't make it. I don't know. So Alexium and Pointera are the two story stocks I own. Even though the reason I call them story stocks, they are actually selling a product. So me calling them storage stocks is not absolutely true because they are selling products, but they're not profitable. And right now, I'm going to put any company that's not profitable, has never been profitable, into the story stock bin or spectrum. And Perenti, funny enough, is on my watch list. Perenti, and when I say watch list, I'm talking about my Bye Bye Australia watch list, which means this is a company's chart where I'm going to look every single day because this is happening. We're starting to see a shift in sentiment. Well, we'll say a possible shift in sentiment in the trend in the company's share price. The share price is now at a 3-month high. In fact, it's about a 5-month high. Sentiment is starting to turn, possibly turn more positive. I do think there's also the argument this company is cheap. P ratio of 6.6. As the Fishbowl mentioned, they're now reinstating the dividend. And that's a potential bullish sign as well. So, yeah, I do think things are looking better for Perenti. Haven't taken position just yet, but I am or have included that company onto my watch list. So thank you, Fishbowl. Hi, Kneppy. What's the timeline for Bry video, which is Brisbane? Is it Brisbane River? That sounds wrong. Big River, Brisbane River, Big River. I am not doing as many standalone videos right now because I'm doing these ASX daily rundown videos. I probably would have done a video on a Big River by now because I did put it onto my watch list or things to do, but I have just not got there. Nice little bounce the last week or so. A nice little bounce, but it's not the end of the downtrend. And the other thing is the downtrend looks ugly. So dividend yield 9.33%, P ratio 7.7. I should have a look at this company. I should have a closer look at this company. So I keep writing it down to do a video on Bry. I just got so many things to do. So many things to do, and Big River was one of those companies. So there is no timeline just yet, but hopefully I'll be able to do a video on that company within the next month, which sounds pretty bad. Thank you, big boy baby. Neil Weston had a bad day, and it's getting worse. I'll give him a like. Thumbs up for Neil Weston. Okay, Kasana. Great day for Dimerix. Okay, this is when Dimerix was up 25%. Now, I know you're not keen on the miners, but check out AUC. DFS, definitive feasibility study, next quarter, 3 million plus ounces of gold in the ground, 3.5 hours south of Perth. Probable resource upgrade. I think it's going to be the next Red 5. Cheers. Okay, I'll talk about Dimerix because there's a few other, I'll talk about Dimerix in a second. Let's talk about AUC. Okay, first thing is I know nothing about this company, Ausgold. So what do you think they do? Mine for gold in Australia. Restatement to quotation. So they did a capital raising. Raised $38 million on the 6th of June. So 2 days ago. So that's interesting in itself. Now, I doubt this company is production. They're just exploration, just based off that comment. We can confirm that pretty easily just by looking at the Apprentice 5B. This is going to take a while to open up because it's ComSec. So before we do that, let's have a look at the chart for AUC. Now, a little bit of weakness in the gold sector right now. And this company did a cover raising, so I wouldn't be surprised to see the share price. Share price rallied 22%. The market liked this cover raising. Well, it was down 8% on the 6th of June after the cover raising, and now up 22% just after. That in itself is interesting. This chart actually does look interesting, doesn't it? Market cap is 74 million. I'm going to put this company onto a watch list as well. And the main reason is just the chart here. Some nice volume coming in. Share price rallied on the 20th of May, 50%. What did the company release on the 20th of May? Refresh board to drive Ausgold towards production. Okay, so I'm going to have a closer look at this company because the chart intrigues me. You can tell if a company is in production just by looking at the first page. There's no mention of that, and we can confirm that just by looking at the appendix file C or 5B, and nothing. Okay, so it is exploring company. and I am trying to stay out of exploring companies right now. I'm not the biggest fan, just because of the increased risk, and I have less certainty about the movement in the underlying commodity. So gold could, won't say half from here, gold could decrease 20% here, and Ausgold would be affected by that. But the whole point of this channel is to share ideas, and Casanana has shared idea with me, and I'm really thankful for that. A lot of the companies you recommend me have a look at, I will have a look at those companies more often than not. So thank you, Casanana8. I will have a closer look at Ausgold. So Daddio says, great day for Dimerix. Pretzel Pieces says, best day ever. Neuren Pharmaceuticals and Dimerix come out with amazing news. And I'll also have a look at Neuren Pharmaceuticals in a second. Just going to see if there's any other announcements here. No, those are the only three on Dimerix. Okay. I'll talk about Dimerix. No, yeah, we'll talk about Dimerix first because that's a better news story. The chart looks amazing. I'm not going to talk about the announcement. You can have a look at that video, which was released on the 27th of May. So this is a chart for Dimerix, and this is really good because this is a few weeks after that announcement. And I think in that announcement, I said, if the share price falls to 40 cents, I will take or add to my position. So I have a longer term position in Dimerix, and I also have a trading position in this company, something I want to do more and more often to build up my longer term holds. So the way I do that or plan to do that is I have a long term position, say Corporate Travel Mgmt, and then I think the chart looks fairly bullish. They release a good announcement, and then I take a trading position. And then just imagine share price increases 50%. So I'm happy because I've got a longer term position, have this trading position. Then I don't really have the thought. I say, well, I've got this longer term position. Now I'm going to take profits in my trading position and maybe transfer some of those profits into my longer term position. That's why I can build up my longer term position over time. How much would I transfer? I'm undecided. So this is a potential case where I'm going to do that in the future. Dimerix. So the company, when they released this announcement, it wasn't a deal with some Middle East, and just the fact that this was a pretty good deal just for the Middle East, a few countries in the Middle East, I went, this company I think has things going for it. So on that particular day, share price rallied 25%. Now, when I see a share price of a company rally 25%, I just like to wait just to see how the market performs or the market reacts. Now, the next day, share price did fall. This is fairly typical. When you see a nice little rally one day, you see some profit taking come in, and it was a really good one-day candlestick, by the way. And then the next day, share price fell 8%. In fact, the share price fell to 38.5 cents that day. I bought shares at 40 cents on that day. The next day, share price remained about below 40 cents, but since then the share price has increased from 40 cents to 57.5 cents, and this chart looks pretty good. We had one day of selling on the 4th of June. Share price only fell 2% that day. Most of the selling was during the trading, but the share price has rebounded fairly strongly after that. This is an absolutely wonderful chart, Dimerix. Now, this is technically a story stock, but the difference between this story stock and the other two companies I own, those charts look absolutely horrendous. This chart looks brilliant, absolutely brilliant. So I will stay out of my longer term position in this company if the chart turns really negative or the company releases something really negative as well. But the chart looks brilliant. So even though this is a story stock, it's more of a trading position, a long-term trading position in a shorter term with Dimerix. Now, the other company released another good announcement on this day was Neuren Pharmaceuticals, but the complete opposite to Dimerix. So here's the announcement, the 27th of May. Share price ret to $24. It was a positive phase 2. Was it positive phase 2? Positive phase 2. Oh, what syndrome was it? Pitt's River. I don't know. Pitt Hopkins. Oh, so close. Pitt Hopkins. So phase 2 trial shows significant improvements in Pitt Hopkins. I actually historically don't react to phase 2 trials. I will react to phase 3, but this was a move in the right direction for Neuren Pharmaceuticals. And even though there was initial excitement, the share price has pulled back all the way, not only to below what the share price was the previous day, but towards a support level. That support level is this little zone here. I'll put a little zone, or actually a rectangle, because resistance and supports aren't just one level. So there's a nice little, I'll just decrease it to about there, a nice little support zone between about $18 and $19. And the share price has actually bounced out of that zone over the last few days for Neuren Pharmaceuticals. Now, I'm not trading Neuren Pharmaceuticals, but I do have a longer term position in this company that I've held since December 2021. So 2.5 years. Share price since then has gone up 5-fold. Okay, thank you for all those who just mentioned Neuren Pharmaceuticals and Dimerix. When and where we could see this top 25 list? I'm doing individual companies. So I've released about 4, I think. About 4. In fact, I'm going to open up my spreadsheet where you can see all the companies I have in this top 25 list. And for some reason, Excel is taking forever to load up. Do I have to? There it goes. No. My computer's getting a little bit old. So I do have a big Mac. I don't know what's called, but I do have a Mac, iMac, and it's getting a little bit old. So maybe it's close to an upgrade time. Why can't I just open up to my most recent one? So recent is called investing. I don't need you, book one. And I bet this is going to take ages to open up. So I've done already 4 companies now. The problem with me doing ASX daily videos is I have less time to do standalone videos. And I do have about 20 more of this. Here it is. So this is the lists of companies. And I've color-coded the ones I've done. So I've done videos on SciDev, ReCloud, Bellevue Gold, Acuementis. I have prepared a video on a company called Gratifi, but I've not released it just yet. And still have videos to do on, and I'm going down the list here. So it's in order of when they release their announcement, by the way. So you released your announcement earlier, and I'm more likely to... what's happening? So then Strike Energy, Neuren Pharmaceuticals, Max 7, SSH, I think it's called SSH, FCL, which is Fineos, I think, Develop Global, EZZ Life Sciences, ABV, ABT Brake Technologies or something, SiteMinder or Codar, Vection Technologies, Airtasker, Aquarian, AQN, Numi, which used to be Freedom Foods, Gnosis, Master Rock, Mastermind or something like that, Vonix, QPM, Queensland Pacific Metals, CTP, which is Central Petroleum, and BRK, which is Brookside. So I did plan to go through all these, and maybe I should get a move on when it comes to these videos. So there's not one video where I look at all 25 companies. I've separated into 25 individual videos, standalone videos. So look out for those videos soon, hopefully. Now, I had planned to do, to end a financial year 23 video series, and I've scupped that, about 10 companies short, just because ASX Daily Video rundown videos is the sort of series I love right now. I love recording those videos. So I hope that helps, Daylep. The vegan table trendy succumb has bought into a DGL group at 57.5 cents. I actually do think this company is dirt cheap. This is another company that is dirt cheap. 56 cents. Just shows you negative sentiment can drive the share price of a company and the valuation of the company down to absurd levels. Now, this company released a positive announcement on the 14th of April or 14th of March. It was positive, but people keep on selling because of the chart. The chart looks really negative. The other thing, I have had a closer look at other chemical companies in Australia and overseas, and it's all positive in this space. So DGL Group is probably the laggard within this space, and it's all because of this negative sentiment in the trend in the share price. So I actually do have a position in this company, and I just think the company needs to release a really positive financial announcement to stop this negative or to change a negative sentiment in the company. It might not happen for a while. Blacktop Images says, in regards to one of my Appendix 4C 5B videos on Acuementis, this is exactly the sort of company that AI will wipe out. Wipe is spelled without the H, by the way. You have some lackey taking photos to input into a database and maybe another person reviewing the outcome. Oh, I could absolutely see that, to be honest with you. And one of the reasons I do have a problem with Acumentis, it's a labor-driven company. And I do think labor-intensive companies are in trouble eventually in the future. So that's one of my problems with Acumentis. I don't like investing in labor-intensive companies. I should say that now instead of what I tried to explain in that video. Labor-intensive. David Giblett, do you think AIS, Aeris Resources, is a buy at the moment? Thanks for your good service. I cannot give recommendations. So I cannot say to you or individual advice. So I cannot say to you whether or not Aeris Resources is a good buy. That's up to you. Why, whether or not I would buy it is another question. Would I buy Aeris Resources right now on the 8th of June 2028? Well, I can't buy it now because it's a Saturday and there's no trading on Saturdays. But would I buy it on open? The first thing I always look at is the copper. Copper, I noticed, was down big overnight, by the way. So I was hoping there was going to be a bounce in copper. I think that is now come to an end because of a really bad day, down 4.2% on Friday. And so I would expect some more weakness in Aeris Resources. So share price of Aeris Resources is going to be highly dependent on copper prices. Didn't they shut down a mine? I'm pretty sure. So let's have a look at Aeris Resources. You'll be able to see that the share price of Aeris Resources had been in a really nice uptrend because of copper prices. So this is Aeris Resources. There it is. So it mirrors the copper prices to a T, almost perfectly. So your opinion on Aeris Resources comes back to copper. Are you bullish on copper? Now, this could be just a little bit of a dip in copper, which means this is could be a perfect buy the dip situation for Aeris Resources. The other question you have to ask about Aeris Resources is whether or not it's the best copper play on the ASX. That's another question you have to answer yourself. I don't know. I actually do have one copper company, Hillgrove. That's it. They've just gone to production. That's the main reason I own them, is they've just gone into production. But I do hope or wish or want the share price to go higher. A few other couple of plays you could talk about. Sandfire. This has been way more bullish than the other copper plays. Way too bullish in my opinion. I mentioned Hillgrove. For some reason, this company's share price dropped 3%, 4%, 5% on Friday when the copper prices went up. It just shows you that participants in the market can be irrational at times. AIC is another one. There's probably heaps. Is it AIC? AI Mines? AIC? I forget. I thought it was A1 Mine. I forget what it is. Actually, I can tell you right now. It's in one of my watch lists. Oh, A1M. That's right. AIC Mines. You can see how this mirrors the copper prices almost to perfection. AIC Mines. So, would I buy Aeris Resources right now? Not after the copper day on Friday. Not now. In fact, 10 days ago, if you go back 10 days ago, let's go back 10 days ago. So that would have been towards the end of May. There was, today's day 8th. Yeah, so about the end of May. Oh, there was a nice little potential buy the dip there. You can see it just hitting the shorter term moving average channel and starting to go up, and that's because copper prices started to dip. So this is one of the reasons why I'm thinking to myself, maybe I shouldn't trade resource companies because it's all about the underlying commodity. But maybe I should be looking at underlying commodity first, and that's it. Maybe I should be just trading commodities. I don't know. Haven't come to a conclusion just yet on that. Animal Spirit says, hi Kneppy, is Audinate a buy at the moment? It's close to $15. And Liam says, why? Downtrending and CFO just resigned. So there's truth in both of, well, maybe not truth. And again, I can't give advice. Would I buy Audinate right now? No. I am a holder of Audinate, but it's in my long-term. Actually, it's in my small cap portfolio. But I do think Audinate has potential to be a long-term, not long-term. It has a potential to be one of the best quality companies on the ASX. I was thinking at one point, but I should trade this because it's not in my quality portfolio. It's still moving in that direction. So maybe I should trade Audinate, but I just thought, no. And Liam is right. It's downtrending. But eventually, I think the downtrend would come to an end because of the quality of this company. And analysis, fund managers know that. That's why the valuation looks completely stretched. And $15 is a really interesting level because the share price did reach a low of $15 in February. It's now tested that low and has bounced over the last few days. So even though the share price has been in a short-term downtrend for a while, those longer-term investors will probably see this as possibly a buy the dip situation. And you can see that in the longer-term moving average channel. Share price has gone below it, but we could see the end in the sell-off of Audinate right now. So come to your own conclusion. What do you think about this company? What is your long-term plan, all your short-term plans around Audinate? Is this just a trade, a buy the dip or buy the bounce situation? Or do you think this company has the potential to be one of the best quality companies on the ASX and you just want to own some shares in this company right now? It's all up to you. I can't give advice. But would I buy more shares in Audinate right now? No. That's just my trading plan because the share price does look fairly weak. And that position I do have in this company is just a longer-term position. I do think there is an argument to say the share price in this company will be significantly higher in 10 years. Will it be significantly higher in 6 months? I have no idea. That's why I am willing to trade this. When I see a sign that the share price wants to take off, I will trade Audinate without doubt. So I bought well lower than this. But I had been thinking, oh, maybe I should trade this, take my profits. But I think that's too late now. And So Casanana, another comment from Casanana. I've noticed US 10-year is creeping up as I write 4.57%. I notice markets get shaky when the 10-year approaches 5%. The idea that debt liquidity markets collapsing freaks everyone out. Your thoughts? Well, yeah. So, many years ago, who cares? The bond yields were 5%. No one cares because we were very used to interest rates being where they historically were. Now we've gotten used because of the bad central banks' decisions. We were overly used to interest rates being too low. And that's why we're freaking out right now when it comes to interest rates, overly freaking out. So let's have a look at bond yields. And I just note, I have a feeling, without even looking, that bond yields must have spiked. So let's have a look. Oh, yeah. So this is 30 years. Yeah. So 10-day goes, 4.7. Now they went below 4.5%. Now they're back above 5.5%. So remember, the market started to get really excited towards the end of October into November. What happened then? Bond yields started to go down. So the market was expecting 6,000 million interest rates cuts by the Reserve Bank. I also noticed Canada dropped their interest rates, didn't they? I'm pretty sure Canada dropped the interest rates. Canada interest rates. I'm pretty sure I did see that somewhere. RBA Deputy Governor says Australia not ready to follow Canada and ECB into rate cuts. Euro Canadian banks hit down button. The Bank of Canada just cut interest rates. Will the RBA follow? Canada first major central bank to cut rates ahead of ECB. Okay, so but who knows why the bond yields rallied? Was it a jobs report? Okay, here we go. US stocks weekly roller coaster. US yields jump as job growth surges. Wage gains accelerate in May. Job growth surges. That's interesting in itself. How did the market go today? I haven't even had a look at this. NASDAQ, Dow Jones, all down slightly. So the market didn't care unless those... I'm going to have a look at the 5-minute chart for bond yields. Was there a rally in bond yields? There it is. The news was released last night, our time at 10 p.m. The market didn't care, but you can just see what happens when the job growth surges. So this is a sign that the American market may be not all that weak, because all eyes are on the unemployment numbers. If unemployment starts going up, there is an increasing chance that America will be declared to be in recession. But the job market right now is fine in the United States. There you go. Anyway, yeah, so today we saw not much weakness in the market, even though bond yields ripped higher. And I think there's there has been too much focus on interest rates and bond yields. Focus should be on the financial performance of companies. And the financial performance of companies, particularly the Mag 7, has been great. That's what's really driven positive sentiment in the markets, and what might continue to drive positive sentiment in the markets moving forward. Thank you, Casanana. Now, I could have thoughts, and you could be complete opposite to mine. Bank top images. Bio, I thought the same. I bought in without thinking, then looked at the chart. Me thinks loose lips prior to this announcement. I am old, getting old, and sometimes I have no memories, but I do think Bio released something. What did Bio release? Biome. What date was that? That was at the 29th of May. International market update and Health Canada approvals. I remember the share price did not move much, if I remember correctly. In fact, the share price went down. I thought it was positive. Share price went down. And the share price, 2 days leading up to that day, share price had rallied about 25%. Loose lips, exactly right. Let's have a look at the quick chart for Biome, not the 5-minute chart. So we have to change that. Yeah, this was a beautiful chart. I can't believe I actually talked about, I did a video on this company way back the middle of last year, and I saw the company sort of break out just after that, and I went, oh, some good volume coming in. I went, oh, might be a nice trade, and I just didn't hit the buy trigger. I wouldn't be trading this company right now, as share price has really done nothing over the past 4 months. Nothing right now, anyway. Thank you. Thank you, Black Top Images. Now, just because I wouldn't buy doesn't mean you don't have to, by the way. Thoughts on Boss Energy reacting to directors selling shares? I can never see why people panic about that. Can't hold shares forever. I'm sure it's just to take profit and expand into something else. Never mind, just found your 28th of May video. I don't understand why people panic when directors sell shares anywhere. Anyway, I don't understand also why people panic when directors sell shares. However, there is evidence that there's no relationship between one director selling a small amount of shares and the financial performance of that company in the future. However, when all of the directors sell at the one time and it's a large amount of shares, there is actually a bit of correlation around that. And we saw this with A2 Milk back in 2021, was it? Maybe it was 2020. 2020 and 2021, in a few days, the directors of A2 Milk sold a massive amount of shares all at once. And then a month later, the company released their first profit downgrade. So don't dismiss reactors or directors selling shares, particularly if they're all selling a large amount of shares. But it's not necessarily a bad sign. And a lot of times you will see share price pull back on that day and then recover fairly quickly. It didn't with Digger Data though. So Digger Data's founder sold some shares because of divorce. Share price didn't recover. In fact, the company released a negative trading update, and I took a trading position in Digger Data. On the 6th of March, share price fell 10% on that day because founder, what's his name, Dicky Data, sold some shares, and I thought, oh, there's going to be a bounce. The bounce never happened, and because the bounce never happened, I gave myself 2 weeks. I went 3 weeks, and then I sold, and I'm just thankful I did that, because you can actually see the share price actually starting to go down just before the negative trading update. That was actually a bad sign. And then the company released a negative trading update, 17th of May, and that's all she wrote. Oh, Digger Data. Yes. Anyway, Kneppy. So many people call me Kneppy. Can you I've done this, haven't I? Parkway Corporation. And interested to know what your play is if interest rates are raised and the market potentially loses their minds. Now, I do have cash. and I will maintain my long-term positions unless given a reason, but I will trade. And if the market starts going down, more than likely my cash would increase. Cash on hand would increase because I just trade individual charts. So that's the way I'm going to play it. Keep my long-term holdings. Don't care about those unless the story changes for those particular companies. But more than likely, if we do see a bit of weakness in the market, I will go more to cash. And as we come out of the weakness, that's when I will go take advantage of my increased cash and buy good-looking charts. That's the way I'm going to play it. And ideally, moving forward, 25% of my capital will be in long-term holdings, and I'll be trading 75% capital, my other 75% capital, because I just am doing better at this point in time trading or using technical analysis. And I like it, to be honest with you. David Race, property rant, New Zealand is exactly the same. Property prices are insane, having so much of the nation's wealth in unproductive assets. That's the truth, isn't it? Houses are unproductive. They don't produce anything. And we have put so much of our wealth into unproductive assets. It's amazing. Here, what's his name? The economist. What's his name? He rants about the same thing. I can't believe this is me getting old. Can't remember names. I have to go to my podcast thingy. Podcast. I have too many podcasts. I forget what the podcast is even named. Debunking Economics, a podcast. Steve Keen, he says this all the time, and I have to agree with him. The very fact that traditionally the banks gave a lot of loans to SMEs, small and medium-sized enterprises. Now they've just pivoted almost completely into giving loans or mortgages. I think that we should be more supportive of businesses, particularly businesses that are willing to innovate. That's where we're going to get productive increases in the long term. I'm just hoping we get these productive increases through AI, but the fixation on property is not good for the country. That is the truth, because they're unproductive. In fact, I'm pretty sure Steve Keen says you should not invest your money in even equities, property. You should be investing into businesses, like strictly into businesses, to get or provide more productivity gains for the country as a whole. Fishball says, I see you often X. Who do you follow on it? Let's have a look. Let's have a look who I follow on X. How do I know who I'm following on X? Here's one, bar chart. There you go. I did actually have a free trial with bar chart, but I've deleted that free trial because I barely used it. The premium aspect of bar chart, not the premium. Let's have a look at profile. Maybe it's in profile. There's me. Following 66, 409 followers. So who do I follow? Well, I haven't done a tweet for like 5 days. Kobe Essie Letter, APP Economic Insights, bar chart, Pedum. It's got all the way down the bottom. Who did I first follow? Octavio Tavi Costa, Lynn Alden, Chris Gimble. You notice mostly investing people here. Michael J. Kramer, Sentiment Trader, Sari Ponzek, Ray Dalio, Martin Pring, Stig from Investors Podcast, Andrew Page, Jesse Cohen, Easy E, Rudy Villapic, Van Dyke, FN Arena, Strawman, Owen Ask, Orthocell. Oh, I'm also following some individual companies. Not sure why I'm following Orthocell in Sonata. Actually, I have no idea why. CM Microcaps, Francis Donald, in fact, Julia Lee. These are all XF1, Lord Walker, Kobe, Stephen Van Meter, who's bullish or bearish every single day. Space. His account is quite devoted. Here's one that's not investment related. Devoted to high quality images of space, sharing quality astrophotography. I can understand why I would have followed this, because I love space photos. Oh, look at that. That's stunning. It doesn't look real, does it? But that's real. Teddy Lehman, Grant Williams. So a few non-investing Juice Media. They do those honest government ads, which are fantastic. Oh, I'm following the RBA. There you go. Cal Cabalinga, Bill McBride, Clinuvel, Henry Jennings, Ausbiz, Small Caps, Market Index, Rask, Oklahoma Department of Wildlife. Probably my favorite. This is my favorite Twitter site. They are awesome at their tweets. They have a great balance of comedy and interesting educational tweets. A beautiful array. Some of my favorite ever tweets are from the Oklahoma Department of Wildlife Conservation, which is weird to say. I'm trying to find a really good tweet here, a really funny tweet. I won't be able to find one because it's just a massive catfish. Yeah, they just replied to a Major League Soccer tweet about a raccoon that got loose on a pitch. Ah, this one, yeah. Do you want to see a picture of a snapping turtle with leeches on it? Because we have a picture of a snapping turtle with leeches on it, but we aren't sure how to bring it up in normal conversation without scaring people. That's a brilliant tweet. Brilliant tweet. 1 million views. They just get so much engagement as well. And here it is. Some leeches on it. Yeah. Anyway, this video has been going for a while, hasn't it? I did have a timer on, 56 minutes. So one more. Hey, mate, now the dust has settled with DUBA, do you think it could be a good pickup down here? No. This was one of the worst crashes in ASX history, but it was only a couple of bad actors in the company. The business hasn't really changed. Interested to hear your thoughts as you have been covering it for years now and know them backwards. I don't know the company backwards, but I would not invest in DUBA until they show something to me. They show that they're not burning through cash. They're still burning through cash. I actually haven't looked at DUBA for a while now. Yeah, so they came out at the halt. Share price was about between 6 and 7 cents now. Share price keeps on falling. I would not be interested in this company until they show me in the market something about the company. And that first thing would be some sort of cash flow, positive cash flow. So let's have a look at the April or the March quarter results. This company has been notorious for burning through cash, not really caring about cash burn, not really caring about profitability. And there's a reason why they had to pivot. And the chart is the reason why. The market wanted something else from the company. Back here in 2021, the market didn't care. The market only cared about revenue growth. And the company had great revenue growth, but they had no scale. So revenue was growing, but the spending was growing at a greater rate than the revenue growth. And this is what happens to a company who has that. Share price has dropped from $2.70 to 4.1 cents. So with this company, all I'm going to do is look at the penny 4C. And I'm going to I need to find some proof that the things are turning around in this company. Maybe not turning around, that they are reaching scale and can become operating cash flow positive. So assessing customers, $11.2 million. And for the year to date, $28.9 million. For the year to date, still burning through $14 million of cash. Still operating cash flow negative by $2.7 million. So $7 million spent in product manufacturing and operating costs, $5 million spent in staff costs. They need to rein in their spending. And maybe they're doing that, but I'm just not following this company anymore until I see signs that they're turning things around. Did they do a capital raising? No, they increased their borrowing. So the other thing I'd look for this company is their debt. So they do have a bit of debt as well. I don't like that either. Anyway, so with DUBA, all I'm going to say with that company is I wouldn't say it's a good pickup right here. Now, again, I can't give advice. For me, I would not even think about buying this company just yet until I get proof the company is turning things around and they're on the path at least to becoming operating cash flow positive. At this point in time, I'm not there just yet. So maybe I'm more risk averse than you. But if you're more of a risk taker and you think this could be near the bottom, it's up to you. Anyway, that's all I'm going to have for today's video. I have made some time up, so I'm only 8 days behind now. That's okay. And QQQ tracks the NASDAQ. Well, that's an interesting thought. Okay. Oh, I'm getting ahead of myself. Okay. I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. I've got my timer on and it's just about to hit 1 hour exactly.